Welcome to Java. Thank you very kindly for joining me. It's February 4th, 2025, and it is also Tuesday. Not just Tuesday, but tremendous Tuesday because we have a lot to cover this morning. A lot of things going on, not just in the market, but also a lot of geopolitical things that are going to be affecting all of us globally moving forward with here. So I hope I can cover as much as possible prior to the market open. And as you can see, brought a few friends to enjoy our coffee with us. We'll be talking about them in a little bit, of course. So let's get started as we normally do with the market risk indicator, our favorite run, the MMRI. Get into some information on what's moving markets this morning. Now, if you're new here, this is comprised for the most part of between the 10-year yield, which is rising slightly, 4.584 this morning, and the relative strength of the dollar, 108.66. Now, this has come down quite a bit since yesterday was above 109. This is because of the drop in tariffs that are happening and some of the agreements that have been made since yesterday, in particular with Mexico and Canada. So we'll talk about how that's going to affect us. It's all over the news, but we've got a slight bit different angle here. So if you're new here, please stick around and see if you like the take that we've got on this. So with this, we've got the fear greed meter has headed a little more deeply into the fear territory. We're watching this in some of the trades that are going on. The bond market, that is part of what is driving the 10-year yield down, is a slight bit of a safety play out of the equities or the stocks. So we're watching volatility index is dropping a slight bit. And as we can see this morning, it looks like futures were in the red last night and going into this morning, but it looks like they're on a bit of a recovery at the moment. We've got a lot of news coming out. This is a completely headline driven market at the moment. So urging caution because it could be, as we've seen the past few days, violent moves and reversals. Now, with this, we've got cryptocurrencies below 100,000 for Bitcoin again, but it did hold the 92,000 level. That's strong support there at that level. So we're watching that, as well as if it breaks back up above 100,000, that is a show of a gain of strength. Now, as long as it maintains that 92,000 level to the downside, it's kind of bouncing around in a range. So I expect with some of the new orders that are coming out, that cryptocurrencies in general could really benefit from this, meaning that the probabilities do favor some strength with those. Now, we've got a weak market. We are opening in the red with the weak market, it looks like this morning. So we've got the daily driver right now is definitely fear. Yesterday, our fear greed meter was at 46. So in the neutral territory, losing some retailers and they're beginning to sell out with the weak hands. They've got a lot of hesitation, still watching these tariff effects, and we've got a lot of inflation that is coming down the road for certain, regardless of the cuts in spending. So with all of that I just threw at you, let's take a look at the calendar this morning. Now, our main indicator for the real economy and what's actually going on, as I've been saying, we're watching jobs. So even though the numbers are cooked a bit, we're trying to watch the actual job numbers, what's going on with employment. So we've got those coming out 10 a.m. this morning, factory orders, which will tell us also a little bit about the real economy. And then we've got some Fed presidents coming out to speak. They always come out to manage the markets one way or another if they're splitting off in a serious direction. So with this Wednesday, tomorrow morning, we are expecting ADP employment numbers, and this is prior to the market open. So get your trades ready for a bit of moves on the market open. Now, I'd like to start talking a little bit about some of the new administration and some of the changes we can expect from this. So we've got a new energy secretary in now. He is the former CEO higher up of an oil company and is vowing to unleash US resources for energy. So, what does this mean as far as oil prices? If they do indeed unleash massive amounts of oil and these reserves, then it's going to push the price down as the supply goes up. We've also got a lowering demand, showing a bit of recession and weakness coming into economies. Now, stepping over, we've got US aid. It has been This is a major corrupt organization, and I don't have nearly the time to even get into the beginnings of this. But this arm has been used to fund massive amounts of United States taxpayer dollars into other agencies, other countries, and funding coups and takeovers. And I'll leave it at that. Hopefully, this video still gets published. We'll see. But with this, Rubio's now confirming he is the acting US aid chief. There's quite a bit of chopping going on there. With this, we've got Treasury Spessant, the new one that has been appointed, the acting director now of Consumer Financial Protection Bureau. Now, this is another arm that has gone deep into corruption, if you will. They have put now a halt to all the rules enforcement actions in hiring. Now, this CFPB, if you will, was originally created under the guise of uh, a watchdog for consumers, as it is for the likes of credit cards, agencies, and they have done everything but. So they've got a lot of other things that they've been pushing instead. So we're going to watch the washout from this. There's a lot of house cleaning, so to speak, going on at the moment. Now, there are also downsides to these, but just leaving this here at the moment. We've got formal Federal Reserve advisor now. Yes, this is the Federal Reserve, indicted for economic espionage. Now, arrested and charged with espionage for conspiring to steal trade secrets from the United States and selling them to China. So, a lot of shakeups going on. A lot of these are some major positions that we're watching shifting going forward. So, with this, let's kind of move on to some of the tariffs and what has gone on. These are creating massive waves in the market. Now, we've got, of course, yesterday the story was Canada and Mexico. So, Canada, the story folding to the demands and striking a $3 billion border deal. Now, they have agreed to strengthen and send troops to their border and help out with a bit of the trade. So, with that, they put off the uh, tariffs on Canada and the energy for up to 30 days. Now, this is a book that was written by Trump called The Art of the Deal, and he's using his negotiating tactics, which is his strong point. He is not a career politician, he is a businessman, so he is handling this in the way that he is comfortable with and knows about best. So, striking deals with not just Canada, but now also with Mexico. And I have to say that it appears that he's done so successfully because he has also put off in trade with Mexico, put off the tariffs there in trade for Mexico sending their troops to the border. And this is more for the drugs. Not sure how much I can say here about this, but also to kind of watch things on that border for us. Now, I do want to say also over on the other side with Ukraine, he is now demanding that the United States get some rare earth metals, which they need for, of course, all of the electric vehicles and whatnot. So, in trade for that. So, with this, we've got Rubio also with Panama Canal. They are now ending their uh, strengthened ties that they have done, allowing China to kind of control them. With a lot of these, they're saying that it's strictly economical and not political. However, he's kind of stepped in, pushed them out, is going to maintain a little bit more of a balance with the United States friendly angle, if you will. And we'll see how this goes forward. Now, Rubio also struck a deal with El Salvador. They are now going to accept deportees of any nationality from the United States, including U.S. citizens if needed. So this is very, very iconic here. It is not been done before, so this is going to be interesting moving forward. Now, something else that is kind of this is going to affect not just politically, but also the stock market in a massive way. There are now orders to create United States Sovereign Wealth Fund, and they're talking about that it could own part of TikTok. They want it to own more than 50%. That would be a controlling say in the company. But not only that, with this sovereign wealth fund, it would enable them to invest in multiple asset classes, which could include cryptocurrencies, could include foreign investments, as well as debt of other countries, and be another balancing mechanism using what equates to taxpayer funds to create this fund as a balance and a backup. So I'll leave that there for the moment. Back to unemployment, because this is what is really what we're looking at forward for the indicator for any real recession coming in, because I never call them until afterwards. So this is a map of layoffs for 2024. This is from Warren Tracker data. Now, as you can see, the deeper the red color, the more layoffs uh, that were put in place for that state. Now, California by far the winner, over almost 50,000 layoffs in 2024 alone. Now, Texas and New York close runner-ups with this. All of these together, and these are going off of actual reported numbers from companies. This is not from Bureau of Labor Statistics. So it gives us a little bit more of a realistic survey on the ground, if you will, numbers not outside of what we're getting from the government. Okay, I've got quite a few more stories I'd like to touch on before letting you go. We've got Amazon's robots saying it could help save $10 billion a year by 2030. And this is a Morgan Stanley analyst. Well, if it can save $10 billion a year, that's really in labor. So more layoffs. We've got Estee Lauder cutting up to 7,000 jobs. They reported that they're swinging to a loss. They've got bad forward guidance, meaning that they're expecting less sales. Their stock was lower this morning. We've got Party Supply Store shutting down a lot of their stores for goods. That's 16,500 jobs that have just gone out the window. And we've also got a return to office. That's what RTO stands for, a return to office mandates, having workers looking for alternatives to companies like Amazon and JP Morgan. Well, good luck to that, because a lot of what they're talking about with these mandates is going to spread. Now, with this, we've got a couple of other things that are going to be indicating the economy. America's last large big city stockyard in downtown Oklahoma City is up for sale, closing down. This not only affects, of course, some of the jobs with this in the agricultural sector, but also the supply of beef, as well as the movement with these. So, hit to the agriculture with this. So, we've got a single stock that I'd like to bring up in a different light, and this is Palantir. Now, I've spoken about this company for quite some time here. They are artificial intelligence, and the bulk of their contracts for a long time has been with the United States military. So, Alex Karp now coming out saying that the company has now secured $1.8 billion artificial intelligence contracts. They have now increased commercial customer base in the United States 73%. A lot of this is in contracts with robotics. So the first company that they have revealed that they've got a contract with is BMW. They are also looking at players like Agility Robots, uh, possibly even with Unitree, Aptronic. If you haven't heard some of these, Sanctuary AI, they're all trying to build their robots. They're in major competition to get the first ones out. So we've got a company called Figure AI, that's as in a figure drawing or a being figure, artificial intelligence AI, standing out due to the speed of its product rollouts. Now, they make these robots, they're going to be putting these out rapidly. Now, with this, we've got United States firm planning for 100,000 strong humanoid robot army from this company in order to counter China. So, just a little food for thought there. And I do have something else that I would like to bring out really quickly about the fires in California. State Farm General, the largest insurance provider, is requesting emergency interim rate hikes averaging 22%. This is for homeowners in the state. They want emergency rate hikes on insurance for existing homeowners in order to cover their dire financial situation after the wildfires last month. So, if you have a home in California, you can expect some of these emergency rate hikes so that you can cover the cost of that wildfire. So, I just want to bring that out with that because that's what we are looking at going forward. So, with this, I wish you all a wonderful day. And until I see you again, will be tomorrow. Sorry, this was so long, but had a lot to get out there. So, until I see you again, my friends, stay free.